Madaz here from madazmoney.com once again, and I'm still feeling charitable this week, guys. So definitely making more free content for you guys. Gonna try to release a couple more videos out today as part of a 3-part video dealing with how I traded SNGX today. If you guys follow me on Twitter, you guys saw that I posted the annotated chart kind of in a joking way, but there was real concepts behind it. There was real substance behind it, talking about the long side, the short side, and the the parts of the chart where you should have not been in at all, and then the trader map part, and then of course the late day fade. So I'm gonna go ahead and make a 3-part video. I skipped the afternoon session, so I didn't short it in the afternoon. My trader nap kind of ran long, and I woke up, I was like, oops, the market's closed. But I was able to trade the morning. As you can see, I made out pretty well, closing in on 7 grand, finishing up with 7 grand in profits on the day. But this series of videos on SNGX will be here to illustrate to you guys a couple of key concepts that I've been wanting to talk about for a while. This particular concept has been talked about a lot. This is going to be a long at the open. However, it's going to be a chase, unlike my washout longs, because I actually missed the washout long here when the stock dipped below $4. Couldn't get filled. I was a little bit too slow with my order, so I actually missed the first move. It would have been an easy 4 grand off of 10,000 shares. But I was able to read the tape, chase it, actually doubled my position to 20,000 shares off that 10,000 share starter. I was able to sell it, make a quick $4,200 in a couple minutes. So I want to illustrate the difference between chasing when it's actually a tactical chase where you actually have defined risks and you read the tape to use that to help you determine when it's actually worth it to chase, versus the other times where you're just blindly buying just for the sake of buying because you have a fear of missing out, FOMO, and then you end up buying the top and then you get dumped on, right? So those are two very different situations that I want you guys to understand, and that's the purpose why I'm making this video. So if you're a new trader, chasing is something that I really advise against, because for the most part, I'm not really fond of chasing. You guys notice I always say you guys shouldn't chase, I don't chase or whatever. And for the most part, that's true. I usually don't chase unless there's some special circumstances. So in this particular case, the tape kind of told me otherwise, and even then I was in and out of the stock pretty quick. So I knew I had a plan in mind and I knew what I was doing. Now, if you kind of just blindly chase, like I said, if you're a new trader and you just blindly chase, you don't have a plan, you don't have defined risk, you don't know when to sell, you don't know how to read the tape speed and all that, you might want to avoid this kind of trade. This is a more of an intermediate concept to even maybe an early advanced concept. You never know. But for the most part, this is something where you actually have a good foundation, like a good fundamental understanding of how the tape works, how the level 2 works, and you just got to get a good feel for it, because if you don't have that yet under your belt, you will find it very difficult to distinguish between a strategic chase and a blind chase, where you might end up buying the top and then getting royally screwed immediately many times. So without further ado, we're going to go ahead and jump into this first video, and this video again is going to be about chasing when it's actually worth it to chase. Alright, so we pick it up here a couple minutes for the open. I'm going to speed this up a little bit so you guys can kind of see. The stock is making new highs pre-market. As you can see, new highs there, 413. Got my supports and resistance levels labeled as usual. You can kind of see on the daily chart, 435, a key level. Stock kind of holding that previous high there at 393. And you're going to see the open. You're going to see we missed the fill here. I'm going to observe a quick washout. Try to get in, kind of screwed up. But you'll see how I adjust and still make some money. So you got a bum rush out of the gate. I think I did try to fill here. Yeah, 410. Only filled 455 shares. And then you're going to see me try to put in order right there, 395, no fill, 4, no fill, and I end up missing this move. So could have been a quick 4 grand right there, as you can see, but whatever, I didn't chase it, didn't want to chase the top. So right here, let's locked in the profits there, 122 bucks at 437. But let's just stop it right here, and let me explain why a chase right there was not a good chase. Just to give you guys a good comparison of what's a good chase and what's a bad chase. Okay, so if you chase the top right here, say you bought 430 or 440 or something like that, right? You kind of don't really have a good defined risk level. I mean, your next support level is basically at $4, and if you buy 430, if you buy 440, you're basically risking losing 30 cents, 40 cents right off the bat, and it's not a good feeling to be down that much right off the bat, right on your first trade. You put yourself off on the wrong foot, your mindset's going to go, it's going to be really tough for you to recover from that kind of a mindset, taking a hit right away. So it's in your best interest to try not to put yourself in a poor position right on your first trade. So chasing at the open, buying the top like that is probably not the best idea for the reason that, like I said, the next support level is at $4. You're basically risking losing 30, 40 cents. Probably not a good risk-reward trade, poor risk-reward ratio. You really don't know where the stock's going to run to. So your best bet is to wait, see what it does, see where it holds the bid. And then you can kind of have a more clear picture that the stock is holding, making higher lows or something like that, giving you a more comfortable feeling to chase if needed. So let's go ahead and continue and see what the stock does. It washes below 4. Not sure if I try to get in again, but I think at this point that topping wick made me kind of feel sketched out on the long side. So I'm just kind of sitting on my hands here waiting to see if it kind of defends 4s. So you can kind of see the stock is kind of holding above 4. Now that you look at the second candle, you can kind of see that now we have a candle that's holding above 4. It's actually holding above 410 to be exact. So now the stock is slightly making higher lows, albeit by just a couple cents. But still, this is a sign that the stock has some support level above that whole number of $4. So that's a good sign. So now you can, it's not quite the time to chase yet, but if you were to buy here, at the very least, you have a more defined risk level, knowing that this stock is kind of held over $4 for 2 candles now. Not sure when I make my first entry, but it should be probably soon. My first entry wasn't the best. I tried to get in at 420 there on that dip, didn't get it. Tried to get in at 430, didn't get it. Got in at 439 there. So at that moment, I kind of thought the stock was going to surge up after it kind of defended 420. So we saw a defend of $4, a washout below $4, a rip of over $4 to 440, and then a defend of 410, and now a defend of 420. So that's what the tape is telling me. This stock is getting support in these 10-cent increments. So I was able to justify a chase there, albeit that was not the best entry. You can see I tried to get 420 and 430, couldn't get it. I guess there's a little bit of FOMO there. It wasn't the best entry, but the idea was this stock on the tape was holding the bid at 420, and progressively higher and higher, 430 and so on. So we'll see what it does here. And then I basically kind of watch to see if it holds support, holds support, looking at that 420-ish level. Probably look to stop out if it goes below 410 and then go short. So I also want to make a comment that having the shorts available also helps a lot with this kind of trade, because if you are wrong on the long side, you take the loss, you bail the long side, you take maybe a 1 or maybe even a 2K hit, but if you know you have the shorts, you can go short, you can probably make it back. So having the shorts is very crucial because you know that you have the option to go take the other side of the trade if the side that you're on is not correct. So this is always why I always stress that you should have a broker that has the borrows, because this helps you, long these stocks with more confidence. Because if you have the confidence of knowing that you can go short if you're wrong, then that makes you feel a lot better about going long, because then that way you won't be tempted to average down or stick to the long side when the stock is obviously a short or something like that. So that allows me to have some extra confidence to maybe chase a little bit when it's appropriate to do so. Again, or size it in a little bit more, knowing that if I'm wrong, I can just bail. The volume is good right now. 2 candles that are over 1 million shares. I can bail it and then obviously go on the short side. So let's continue here. You see the 420 is still holding on the level 2. There you go. So you see me double up there, and right when I doubled up, so let's rewind that a little bit. So that was probably a good example of a good chase. So you kind of see, I'm going to slow down the tape. Now watch the exact moment when I doubled up, and right when I doubled up, the stock surged. See, right there. So I doubled up my position to 20,000 shares. I'm not sure what I filled at, 435 or something like that, right? So you can kind of see the tape speed up. If you look at the candles, right, you got 3 consecutive candles of making higher highs, right? I mean, not higher highs, higher lows, sorry, higher lows. You kind of see the stock defended 420, and now it's catching a bid in the 430s, and now you see the 440 is going to thin out really quick. So that is what you call a very strategic or tactical or well thought out chase, where it actually makes sense. Unlike the blind chase at the open, where if you buy the top and you get dumped on 40 cents and you might be forced to stop out, right? Here, you kind of observe that the stock is holding bids at higher prices, effectively, basically another way of saying that the stock is making higher lows. And now the stock is getting support now in the 430s, which previously it was holding support in the 420s, and prior to that the 410s. And now it's getting some prints. You can see at 440. Let's go ahead and play the tape. Boom. Now the stock is approaching new highs. Boom, right there, new highs. So literally seconds right before I got in was the move to new highs. And that's no coincidence. This obviously comes from experience, and it comes from tape reading, and it comes from just basically combining all of the pieces of information that you have in front of you. This is not gambling, guys. This is not Vegas. If you want to do that, go put it on red and roulette. This is where you think about it, you break it down. Obviously, these decisions have to be made in a split second's notice. You have to notice these patterns, these higher lows, and the tape speeding up, and the bids supporting, and the ass thinning out, and all of that to be able to chase. That's why I'm saying that if you're a newbie trader, it's kind of hard to process all this, and it's very difficult, even if you understand the concept, to make these decisions all on a dime, right? So if you're new, you might want to, either do this with small size or just watch or something like that. Watch this video 1,000 times if you have to. Make me a couple extra cents in Google AdSense revenue if you have to. If that's going to save you from buying tops and getting dumped on, do it. Because this is not a beginner's concept. This is kind of like you have to have experience. You got to have, like I said, a foundation, a fundamental understanding of how the tape works and how these chart patterns, these kind of micro chart patterns of these higher lows come into play. Now you can see the stock ripped to 460 just like that. Now I should have probably sold there, and I don't know why I did it. It just happened so fast I couldn't react in time. So I actually held through all of this. I had multiple chances to sell at 460. I don't know why I didn't do it. Stock ripped going back down to below 440. So that was kind of a dumb move. I should have sold it. But you'll see in a couple minutes I actually did get a chance to sell this stock in most of it in the 460s. And then I whacked out the rest in the 450s. So still locking in a nice gain. So you'll see in a second that I do exactly that. And you'll see my order on the left side get executed. Let's go ahead and speed things up. But for the most part, you can kind of see that the bids are propping down the 440s. Again, that whole theme of bid support in these 10-cent increments, that's the pattern that SNGX is showing us, right? 410s bids. And this is something that you look at the tape. Again, to reiterate the point, it's very important. That's why I keep mentioning it. 410s, 420 bids, 430. Now you look at the 440s, right? You got the bids in the 440s. You got people buying in the 450s, right? There you go. Another 440 bid support. Tried to tank below 440. Didn't get there. Now I sold some in the 460s right there. I've sold like 12,000 shares, almost all of it. And there we go. Filled most of it. Just 51 shares left at this point. It's token amount of shares. Who cares? Already locked in my money. $4,200. in what? Just a couple minutes. Boom, filled all out. $4,200 in just a matter of minutes. So this is a pretty good example, although my first entry, I admit, was not the best, but the second entry was probably the best example I can probably find. Literally, you guys saw it right there in this video, in this live trading example, the exact moment that I bought it, seconds after that. Stock rips to new highs. And again, this is not the best trading. I should have sold the 460s right there. In 9 out of 10 times, I would have sold it. I wouldn't have held through all of this, 440 nonsense. But nonetheless, I was able to hold it because the 440s were propping. Now, you'll see that that ended up being a pretty good decision for the time being, as this stock ended up fading off back down to the 430s and the 420s, which was the first sign of weakness shown by this stock. So basically, it dropped down to VWAP, I believe. You'll see that in a couple of minutes. Speed things up. Kind of see the stock kind of top. You see right there? Boom. Sorry for that little glitch. But you can kind of see right there. Boom. Stock dumps. And this is why you guys cannot chase. You cannot chase, guys. Reading the tape is so important. Why did the stock dump there? You can kind of see 3 consecutive candles. Remember, the prior pattern on the chart was the stock was making higher lows, and eventually that higher high at 466, right? Now you got 3 consecutive 3-minute candles of the stock not able to make higher highs. So the trend, this micro trend, has been broken. This pattern is no longer valid for this duration right here. And not to mention, the stock just made a lower low, It broke below the low of the previous candle and the previous candle as well. So remember, this pattern was the stock was catching a bid on the level 2. You guys saw it. Just slow the video down, rewind it, and slow it down if you have to. You guys saw the bids at 410. You saw the bids at 420. Obviously, on the washout, it held the 390s. So the 390s, 410, 420, 430, and that's when I got in. And then the 440s got a bid, rips to 466. And then the 440s propped. And then all of a sudden, bam, rug pull, right? So you still got to take profits when you can. There are multiple chances to take profits in the 460s. You saw the level 2 stall there. Again, rewind it if you have to. You saw the level 2 stall. 3 consecutive candles on the chart. Not able to make new highs. Pattern is broken. It's time to take profits. And if you didn't, obviously, if I didn't, I had 20,000 shares, I would have went from being up $4,000 to being down $2,000, right? So there you go. So this stock ended up bouncing. It caught a bid here. This is basically a VWAP bounce. I probably could have gone in with small size or something like that, but I opted not to do it. But nonetheless, you can kind of see why you got to take profits and when you should chase and when you can't be chasing. You can't chase the top when the stock is on the chart is showing basically a triple top, 3 consecutive candles of not being able to make a new high, right? It's a game of patterns, guys. All it really is. It's a game of patterns. These are micro patterns. If you're scalping like me, you're doing micro patterns. Once the pattern is broken, you just got to get out and then a new pattern will come up. I tried to get in here. I guess I didn't get filled. Didn't bother with it. But you can kind of see, if I didn't take profits, I had a 437 average, 20,000 shares. The stock went to 415, guys. 466 to 415 in what, 2 candles? Think about that for a second. You go from being up $4,000 to being down $4,000 because you didn't recognize the pattern of the chart. You didn't take profits. You know what I mean? Or if you decide to chase the top without recognizing that little triple top there. There you go. You're going to be kicking yourself. You're going to be down big already at the open, and then you're probably going to fall into that, maybe that revenge trading or that average down trap that ends up blowing a lot of traders' accounts. So hopefully this helps guys explain why sometimes it's actually valid to chase a stock and why the majority of the time, which I always mention, is actually not the best idea to chase a stock. Got some pretty good examples of when to do it and when not to do it right here, using the chart, using the level 2, reading the tape, and all that. So stay tuned for part 2, guys, where I show you how I succumbed to FOMO and tried to slam the bids on the short side and ended up losing $2,000. But I stopped out and prevented myself from losing 3-4 grand. So you'll see me take a loss for a change. I actually was able to record this footage because I accidentally recorded longer than I expected, which ended up being a good thing. So one of those unfortunate mistakes like penicillin. So stay tuned for that, guys. I'm going to record that and I'm going to post it. It's part 2 of the SNGX series. Thanks a lot, guys.